Now, the Ghana Free Zones Board has begun initiatives to woo local investors as it celebrates its first investment week. The board has extended invitation to local businesses to take advantage of government's One District, One Factory initiative, as well as enjoy the stimulus package being offered to establish export-oriented industries in the various free zone enclaves in the country. Ibn Sabute has more in this report.
Information by the Free Zones Board indicated that out of the 201 licensed Free Zones companies, 56 representing 28% are wholly owned indigenous companies since its establishment. The board says Ghanaian companies already operating in the enclave but are financially depressed have an opportunity to access government stimulus package. It is also prevailing on other local industries to take advantage of government One District, One Factory initiative to establish in the Free Zones enclaves in the country. Michael Otribefi is Executive Secretary of the Ghana Free Zones Board.
We want to embrace as many companies as possible, and so now we're going to even start a preparation towards getting a lot of companies to be part of the arrangement.
What of those existing ones who are not doing so much? They are not doing well due to one or two issues.
The companies, yes, you know, we encourage them. We are trying. I mean, the government has brought what we call the stimulus package to take care of businesses in crisis.
Do they also have opportunity to?
Yes, in the company in Ghana. If it's an indigenous company, I mean, you can also be part of it. What we are doing is that we are looking at the concept in totality, the free zones concept totality. Everybody who wants to be part of the free zones is welcome, provided you are prepared to be part of what and be part of what we want to do and be compliant.
The Executive Secretary spoke with Joy Business at the sidelines of the launch of the board's first ever investment week. As part of the celebration, the board will be hosting local business organizations, including the Association of Ghana Industries (AGI), among other individual investors on Tuesday, August 29th, towards implementing their new strategy.
These are people who we believe have excess funds to invest, and most of them don't understand the free zones program or concept. This is a specialized concept. Let them know what the free zone stands for, what is our mandate, what they need to do to be part of the free zones, and we just want to tell them. So it is a very simple and a short ceremony or meeting for us to introduce the free zones concept to them, and we believe that when they even accept the concept and they want to do business and they don't even know the right business to do, we can recommend the business to them because we are poised to help local investors to be part of the program.
The Investment Week celebration is part of strategies of the new management to provoke interest among Ghanaians.
Now, the Intergovernmental Action Group Against Money Laundering in West Africa has challenged government to tackle economic crimes in the country. This is because the group has identified money laundering as impacting negatively on the economy. Speaking to Joy Business on the sidelines of a joint regional forum on gender and youth dimensions of financial and cross-border criminality in West Africa, Deputy Director General of the group, Brian Ankusabati, says although Ghana is on track in dealing with economic crimes, there is more room for improvement. Here's Sheila Tamaklo's report.
The three-day workshop by the Intergovernmental Action Group Against Money Laundering in West Africa is aimed at combating financial and cross-border criminality in the sub-region. Brian Ankusapati is the Deputy Director General of the group.
Ghana has done quite well, I mean, in terms of what they are trying to do to fight, money laundering and other related crimes. But there is still more to do. There are some laws I can't give you offhand which are yet to be passed by Parliament, to again make sure that we strengthen the system. But law per se is not the issue. You pass the law, the next thing is that it must be implemented. The implementation is very, very important.
On his part, head of research at the Gender Development Center of the ECOWAS added that fighting illicit crime would require joint efforts by private sector and other groups.
Economic and financial crimes, particularly money laundering, involves, circulation of money, conversion of dirty money to clean money, and it affects business in a very significant way. So the private sector has a stake, a very key stake in the effects of organized transnational economic crimes. And the youth are also significant part because the when you come to cybercrime, for instance, the youth are very much involved in that. We also have the problem of unemployment. There's high unemployment among the youth, and these are idle hands, and so the youth have become vulnerable and they have become susceptible to being targeted by criminals, people who want to engage in transnational crime, and so they also are very strong stakeholders. They also have a role to play in addressing this issue.
The mission of the Intergovernmental Action Group Against Money Laundering under the ECOWAS is to promote concerted action against money laundering and financing of terrorism in the Western region.
Moving on now, and head of brokerage at Databank, Alex Bohin, has kicked against any attempt to remove the 5 companies suspended by the Ghana Stock Exchange from the market. The 5 firms, African Champion, Clydesdon, Golden Web, Pioneer Kitchenware, and Transaction Solutions Limited, were suspended last Friday by the stock exchange. According to the managers, these firms have failed to meet listing obligations like holding AGMs, publishing financial results, and payment of listing fees. After several warnings, they have up till September 8 to comply or risk being removed. But Mr. Bohin tells us this is not the right move to take.
The listing is an option, but I think it is not the best option, in particular because if you look at our market is quite small. We have very few stocks that are listed, just about 40 stocks. And the stock exchange's posture should be to actually encourage more listing rather than delist companies that are already on the bus. What I will say is that for us to be prudent for this company to look at themselves again and probably repackage themselves and then migrate them into the GACs, I think that will be a very viable option for them at this moment. Because when these companies were listed, the GACs was not in existence. And now that we have the GACs, I think most of these companies could be a good candidate for the GACs. Because, I mean, if you look at the exchange, the main market, the listing obligation or continual listing obligation is quite stringent. For instance, you must meet a certain reporting standard. Your report, your accounting financial statement must be reported on quarterly basis, and you should hold an AGM and all that. But I think that on the GACs, the rules are a bit relaxed, and that will be suitable for these companies. And later, when they actually become matured, they can then be migrated onto the main market. So I think that the listing is an option, but it is not the best option in our view, especially when we are trying to encourage more domestic companies to list on the stock exchange.
Mr. Bohin also downplayed the impact of the suspension of the 5 companies on market activities.
If you look at the 5 companies that have been suspended, if you put their market capitalization together, it's just under 6 million compared to about 58 billion for the whole market. On a year-to-date basis, these companies cumulatively have traded about 50,000 shares in value, you understand? So they are almost significant on the market, and everyone knows that, every investor knows that these companies are not significant players. So this action for me might not indicate any problem with the stock exchange.
All right, so you heard the views of the analyst there, Alex Bohin of Databank. Joining me in studio now is Bertha Tubiga of Gold Coast Fund Management. I want to ask you about that first, Bertha. 5 companies suspended from the market. Do you agree with him that these companies should not be removed eventually?
Well, thank you very much. In a way, I agree with him to some extent, whereby he's suggesting that they could be moved to the GACS to actually help them improve, because the GACS is more flexible as compared to the main exchange. But there's one thing, as a company, when you're listing on the exchange, there are so many obligations that you are supposed to abide by. And these are supposed to be met at all costs. If these obligations are not met, and the stock exchange has come out with these, like these 5 companies we're looking at, haven't released their financials for some time, like they haven't released their financials. We don't see much trade going on in this trade, or no trade at all for like continuous years. You don't see any trade going on in these equities that are listed on the stock market. You look at their returns and it is 0.00 consistently. And then they don't hold annual general meetings as indicated by the stock exchange. And these are obligations that you have to abide by. And if you look at the report that was brought out from the Ghana Stock Exchange, they were prompted. It is not something that was just done or a notice that was just brought out. This is just to let us know what is happening. But these companies have been prompted several times from the report. And if you have been prompted, at least some measures should be put in place to actually come up with some of these reports, or at least hold some AGMs to get customers informed. And one thing is, these requirements or obligations are supposed to protect both the company and then the investor, because it actually informs you, the investor, what's going on with the company. If you don't have these informations, then it makes it difficult for you to actually invest in these companies. And that's a similar thing that happened with UT, where they were not releasing their financials for some time, and it actually resulted in they being delisted from the stock market. So I think that it is actually an obligation that's been acted upon by the stock exchange.
What do you have to say about the timing? Because people are saying, it's coming around the time where, financial regulators are trying to be very, very stiff on some of these companies.
One thing is the timing could actually bring about fear and panic, and it could actually deter some investors from maybe actually investing in equities on the stock market. But the right thing needs to be done. And I think that they are not actually, they are suspended. You can't trade in them now, like as of today, you cannot trade in them, but they've been given some time to actually rectify some of these issues. That's the 8th of September 2017. If this is not done, I think the other alternative whereby they can be shifted to the GACS would be very effective.
And he also sought to downplay the impact of the suspension on the markets. Is that the same view you hold?
The impact, if you're looking at the impact it's going to have on the market, is 2 sides. But for the short term, we could see some confidence being shifted. But this should not actually shift investors' confidence away. We should educate our clients and more investors that the stock market is actually doing very well. And I'm sure these things are being put in place to actually stabilize and make the stock market more efficient. So, and it's a good step, but probably the timing is what makes it a bit shaky.
All right, so let's move straight into today's market activities. Once again, we're expecting a lively market this week.
Yes, that's our expectation as well. The market started on a good note. We had 2 equities moving on their previous share prices. Enterprise Group Limited, after trading 8,700 shares, went up by 8 pesos, and it was part of the gainers last week on the stock market. If you look at the absolute gains or absolute returns that we had on the stock market last week, EGL advanced or went up by 78 pesos, and that was the highest that we recorded. And today it went up further by 8 pesos and is trading at 4 cedis 24 pesos per share. And then Total went up by 4 pesos, and it closed at 2 cedis 29 pesos after trading 4,500 shares. These were the only 2 movers that we had today on the stock market, but we had a lot of equities trading, about 15 equities trading on the exchange. But last week, the market did very well. We had 13 gainers and then 3 losers. GCB lost about 4 pesos, Aluworks and then PBC lost a peso each on their week open prices. Expectation this week, we're expecting the pattern to actually it's not going to shift so much from what we saw last week. We're expecting it to do very well, and we're also expecting liquidity to go up as we saw last week. We're expecting equities like Carl, Standard Chartered Bank, EGL, FML, and Gold to remain on that upward trajectory in terms of the gains for the last days that we have in the month of August on the stock market.
Right, just before you go, we need to talk about this, the non-performing loans and new concerns rising. What information are you picking from your end?
Well, the Bank of Ghana has actually released the report for the first half of the year. And if you compare these figures that we're seeing from Bank of Ghana to that of what happened last year, you realize that NPL ratio from 18.8% June 2016 has gone up to 21.2% for June 2017. That's for the first half of the year. And this should tell you that it's gone up. Now, last year, as of June, we had a total of 6.09 billion NPLs. That's non-performing loans, and this year we have 7.69 billion non-performing loans.
That's huge.
And this is as a result of the debts from the private sector businesses. And if you look at the total debt, that for the NPL, about 95% of it is coming from these private sectors. So that's actually these businesses, you take loans from people and you're not able to pay back. So the banks are actually suffering. This is one thing that affected the banks so much last year when the stock market was not doing very well. And it actually brought the financial stock index was underperforming that of the composite index on the stock market. And we're hoping that with this positive trend that we see on the stock market, though this is not a very good thing for the financial equities on the market, but we're hoping that the impact will not be very significant. Some equities will still stand out when it comes to very positive performances on the stock market. Now, the public sector, if you look at the public sector NPL, it's actually reduced. You know, the private sector makes about 95% of the total debt. If you look at public sector, NPL reduced from 12.7% to 5.1%, comparing 2016 and 2017, and that's very impressive. And this was due to the restructuring of the debt for TOR and then VRA for the period under review. So NPLs have gone up, but I'm sure we should expect the best.
All right.
It shouldn't deter investors away.
Definitely. Sure. Thanks very much indeed, Bertha Tibiga. And interesting you mentioned this at a time where we are also expecting the Bank of Ghana to announce the new minimum capital requirement for banks. We'll have a story on that for you ahead. But first, I want to turn to energy because the price of some petroleum products are expected to go up by some 5% in the coming days. This is not as a result of the usual factors like the city's performance or price of crude oil, which often influences pump prices, but rather enforcement of new sulfur levels for diesel. The following Business Desk report has more.
Apart from the minimum capital requirement that the governor of the Bank of Ghana is likely to announce in the first week of next month, commercial banks in the country should by the end of this year start implementing a new regulatory requirement that could compel them to increase their capital, again, based on the business that they want to undertake, or call it risk-based capital. So let's say if the capital is increased to 450 million Ghana cedis, and that same bank wants to undertake a business that requires a lot more funds, then that bank may have to increase its capital again. All these have forced some of these banks to start this engagement with other financial institutions of like mind, so they're not overtaken by events. Joy Business, for instance, can confirm that one foreign bank and another local bank have engaged in serious major talks, whilst others are talking to strategic investors that could change the ownership structure of these banks. One thing that Joy Business can state is that looking at some of these discussions, if they are successful, then the increase in the minimum capital requirement will indeed lead to some drastic reduction in the number of banks in the country.
All right, we apologize for that. We'll bring you that report subsequently, but we want to move on now to the banking sector because, as we've been saying, some banks have started engaging in serious major talks ahead of the implementation of new capital levels, and my colleague George Afe put together a report on what he's been hearing from the ground.
Apart from the minimum capital requirement that the governor of the Bank of Ghana is likely to announce in the first week of next month,
we'll sort that out and get back to you. You're still watching Business Live. We'll be back after this break. All right, everyone, welcome back to the bulletin. We'll take you back to an earlier story. The price of some petroleum products is expected to go up by some 5% in the coming days. Now, as we've been saying, it's not as a result of the usual factors like the city's performance or the price of crude, which often influences pump prices, but rather enforcement of new sulfur levels for diesel. There's more in this Business Desk report.
The National Petroleum Authority last month began the enforcement of new sulfur levels for diesel after what some might call pressure from some interest groups because the products with high sulfur levels is said to be injurious to vehicle engines and even the health of human beings. The authority had earlier indicated that after November 2017, it could withdraw the license of any importer, distributor or marketing company that is found to be importing products below the 50 ppm levels. But according to the importers, the sudden hike in the import price per litre has caused a reversal in the recent trend of low oil traders' premiums charged to BDCs. The joint effect of the marginal increases in BDC premiums and the enforcement of the new 50 ppm levels will push prices up by 5%.
All right, now some commercial banks have started engaging in serious measure talks ahead of the announcement of a new minimum requirement for banks. Giorgio Afe has more in this report.
Apart from the minimum capital requirement that the governor of the Bank of Ghana is likely to announce in the first week of next month, commercial banks in the country should by the end of this year start implementing a new regulatory requirement that could compel them to increase their capital, again, based on the business that they want to undertake, or call it risk-based capital. So let's say if the capital is increased to 450 million Ghana cedis, and that same bank wants to undertake a business that requires a lot more funds, then that bank may have to increase its capital again. All these have forced some of these banks to start this engagement with other financial institutions of like mind so they're not overtaken by events. Joy Business, for instance, can confirm that one foreign bank and another local bank have engaged in serious major talks, whilst others are talking to strategic investors that could change the ownership structure of these banks. One thing that Joy Business can state is that looking at some of these discussions, if they are successful, then the increase in the minimum capital requirement will indeed lead to some drastic reduction in the number of banks in the country.
We are taking you straight now to our interview of the day. It has to do with developments within telecoms firm Expresso. And while the chief executive of the Jospon Group, Joseph Siao Japan, has denied his company ever attempted buying out Expresso Telecoms, the original owners of the company, Klugeson International Limited, has over the years advised investors, local and foreign, against any such deal, insisting it remains a sole shareholder of the company. Jospon Group was reported to have advanced moves in 2014 to acquire the telco from the embattled owner Sudatel. The sale was reportedly managed from Dubai, but speaking to Joy Business, Mr. Siao Japan explained his company has never been engaged in any such transaction.
Interview of the day.
I have any interest in Expresso. I don't own Expresso. I don't have any interest in it. Earlier, there were certain allegations that we are interested. We are not interested. There's nothing about Expresso.
So you never got involved with ZTE or any company of the sort?
No, we don't have anything.
And as far as Suba is concerned, no plans to, expand your broad-based technology-wise?
Suba, we are developing into other sectors, not into. By the nature of business we do, we monitor the telecos. We don't.
No, I was asking this question against the backdrop that we heard of reports that you were even in China to negotiate.
No, it wasn't so. We didn't get there to go and talk about anything. We don't have any interest in Expresso. We are doing revenue monitoring. In fact, areas where my strengths are, I want to develop and do it very strongly.
interview of the day.
And thanks for watching our show tonight. My name is Daryl Kwa. We are back same time tomorrow.